Welcome back. Today we're going to be talking about oil tankers, the whole oil tanker business going forward, and where I think it's going to go in 2022 and beyond. Welcome back to another video. As we're nearing the end of the year, I just want to take a look back at how my investment in my oil tanker, which is in Nordic American tankers, did over the past year. And it was a dismal investment, dropping 43% over the past year. Even in comparison to other oil tanker stocks such as Frontline, it was up by 7% over the past year, or even Euronav, which is like the darling of the oil tanker crowd, it was up by about the same 7% in the past year. This is my worst investment by far, down 68% overall, not representing the dividends that I received when the market was really good for tankers, but basically my average cost was $5.70, whereas the price right now is $1.80. So book cost was close to $2,000, and I mean down by $1,300, like close to 70%. Obviously, that hurts. But I'm still holding. I mean, like this was just a screenshot for today. So I will be holding my oil tanker investments for some time to come because I do think we are near the bottom of this cycle. But anyways, it hurts that even compared to other tanker stocks, I'm down like over the past year, way more than others. It's down by 43%. Part of it is because this is retail traded stock, so maybe the price was artificially increased. However, they are issuing more shares. The shareholder dilution is a pretty big thing. Also, they had to sell some of their ships, and a lot of their fleet is relatively old. I sort of bought in on the hype. I didn't really do my research to compare oil tanker stocks, and of course, I was left kind of holding the bag. But I do think that this could be a turnaround play in 2022, depending where the oil tanker rates are, which of course we're going to discuss. But they released their third quarter results, and I haven't touched on them, so I just want to go over the results here because they also kind of include an overall summary of how the oil tanker market is. So there is so much confusing day-to-day noise in the market about oil and gas that many investors have decided to steer clear of the tanker sector entirely. I mean, that's not true still. Frontline and Euronav are still up by 7% over the year, so it's not bad. But it's still lagging the market. I think the S&P is up by about 20%, NASDAQ is even higher. All markets are volatile, and as history has shown, volatility can be our friend when rates rise suddenly and the company's stock price benefits. We firmly believe that successful investors buy quality companies that profit handsomely when the tide turns. I don't know if I'd call NAT necessarily a quality company. Of course, I know that I own this company, but I do think that, there's no point selling when I believe that the NAT price is at a low point. I mean, it's at $1.80. Even over the past 5 years, it's down by about 70 or 80%. So I don't think there's really any point in selling when I know that I can sell at a higher price than $1.80. I might even buy in on Wealthsimple to take advantage of some of that cyclicality, because when you're trading commodity stocks like tankers, oil and gas, you can definitely ride the volatility and ride the commodity prices because they usually go in cycles, right? So that could be a good thing going forward. So, of course, they only have Suezmax vessels, which hold 1 million barrels of oil when you're looking at the other tankers. So the Aframax, they hold 500,000 barrels, and the VLCCs, the very large carriers, they hold 2 million barrels of oil. So they think that that's the best feature because the Suezmaxes are kind of versatile. So the Energy Agency in Paris confirms that global oil demand is nearing pre-pandemic levels of early 2020, and more importantly, oil supply is rising fast, which is good for NAT Suezmaxes and provide confidence that a turnaround for that NAT fleet is getting closer by the day. So that's also good news. However, just during the third quarter, I mean, I guess let's take a look at this. During the third quarter, the time charter equivalent, which what NAT was getting paid per day, was pretty low. The average TCE for active fleet during Q3 came in at less than 6,000, 5,800 per day. However, the average cost of maintaining a ship is 8,000 per day. So they were loss making for this quarter. And this was down. So Q2, they did 7,800, whereas Q3, they did 5,800. So losing quite a bit of money here. The average earnings for a Suezmax tanker for the last 30 years has been close to $30,000 per day per ship. So still way below pre-pandemic levels. And that's because still there's sort of a lot of uncertainty regarding oil supply. Oil inventories have been drying up, and people have still been using the oil that's been stored in silos, right? So inventories are nearing 5-year lows as well, and that's what they're saying. So they're kind of bullish on the cycle that finally oil is picking back up, and the transportation for oil, especially because inventories are dropping, will need to increase to compensate. Let's see if I've missed anything here. During recent months, we have secured term contracts with prompt delivery for 6 months or longer at rates above $20,000 per day or more for 4 of our vessels. The TCE rates for these ships were sustainably higher than the spot market at the time and still are. These 4 contracts work as a hedge. Our fleet of 24 ships has significant upside, blah, blah, blah. We undertook maintenance of 3 ships, so they were withdrawing them from the market for a large part of the quarter. So again, that's not like, they have to maintain the ships, especially because most of the NAT ships are pretty old. So they sold also Nordic Sirius. The price was between 14 and 15 million. After the transaction, our fleet counts 24 units, including 2 new ships. The estimated value of our 2 new ships is 70 million per ship, but they were ordered at about 55 million per ship. So at least they made a profit, and they were strategic when they bought their new ships. Is basically what they're saying there. So net loss of 27 cents. However, they had a one-time impairment chart of 8.4 million. I have no idea what that was for. They don't explain it anywhere in this report. Let me know if you know down below in the comments. Let me also know if you still own NAT or any other tanker stock. And so without this impairment charge, they lost 22 cents, but with it, they lost 27 cents. This compares to the previous quarter, and which they lost 18 cents. So they're losing more money than the second quarter. And I mean, of course, generally how much money they're losing correlates to their stock price. And I mean, it's obviously been pretty downhill. And yeah, they talk about their vetting record, blah, blah, blah. They have a 1 cent dividend. So I own 350 shares. That means I'll get $3.50. Of course, that's not, much, but I mean, they're still paying a dividend. I don't even know why they're paying a dividend, because they're just losing money left and right. So, it is what it is. So they also talk about how the pandemic lasted longer than they thought in the spring of 2020, especially when you're looking at Omnicron. Looking at the COVID live updates, I mean, like right now, we've seen daily cases rising. This is like, we've had so many waves. However, this wave is less deadly but more infectious. So more people are getting infected, especially even those with 2 doses of the vaccine. However, it's less deadly, so it's less needing to worry about it as much. As well as winter is coming, which means that, or winters are kind of already here, so which means that there'll be more demand for oil anyways, and natural gas. And so, I mean, of course, it's worrying to see a rise in cases. However, it is less deadly. And I mean, I think at this point, lockdowns are becoming less and less likely as the world needs to live with COVID, and it especially becomes endemic in a population. But it's still kind of, I don't know, it's worrying that they're losing a lot of money. They also say that they also talk about their debt levels. Let's see, the proceeds from the above mentioned sale have been used to pay down part of our 306 million senior secured facility with the Bank of Texas. The company's total net debt is 259, so close to 260 million, or 11.8 million per vessel based on 22 vessels. Our objective is to become debt free. I mean, sure. I mean, that's every company's objective. Will they become debt free? Definitely not in the foreseeable future. We'll see how everything shakes out over the next few years. Of course, this is a long-term hold for me by now. I mean, it's nice that they're paying a dividend, but it's only 1 cent. But I'm more considering the long-term future of NAT, and even Friendline or Euronav. This applies to all the oil tanker markets when I'm looking at their quarterly results. I mean, I do think oil demand will pick up. Of course, we're having a green revolution, but that won't mean that we won't need oil. We'll still need oil for 5 to 10 years to come. Even now, considering my own environmental conscience, I want to sort of lean myself off of companies like NAT, but I'm not willing to take this company at a loss, okay? Because I still think that, from the dividends plus hopefully share price, appreciation, I will still be able to make some money out of NAT. So yeah, that's their debt levels around $260 million. You look at the market cap, it's about 310 million. So, I mean, their debt levels are almost in line with their market cap here. And if you're just looking briefly uh, at their balance sheet. So right here, we can see their loss was 27 cents. Previous quarter was 18 cents. And even in the previous quarter, Q1 was 7 cents loss. So they're just continually losing money. This compares with the 9 months ended of last year, where they actually made 53 cents per share. So, it's so cyclical, it's so volatile, depending on the TCE rates, depending on the spot rates. And I mean, usually it's 30,000 per day per ship, and so they could easily, get back to that, especially if if they go from 55,800 to around 30,000 over the next year or two. That would be huge, right? Especially as oil demand picks up, especially if they're saying is correct, which it is. Oil demand is picking up, and there'll be more need for containers, oil shipping containers, or oil tankers, I should say. So, that will be good. But let's see, common shares outstanding. I always like to see this part. So it looks like they added, they went from, let's say, 160,000 to 171. So they added over 13 million shares, which, it is what it is. Common shares outstanding, like they added 15 million here. So they're also diluting shareholder value, which is why the price of NAT is just decreasing and decreasing and decreasing. Often, I think investors are also worried about oil tankers and they want to put their money in oil tankers, but this is also worrying that they have to, they went from 150 in the first quarter to 170. They added 20 million shares, right? So, sure, they need to raise money to basically pay off their debt. They need to increase their shares, but this is also concerning as a shareholder. I just hope that when things turn around, they can start buying back their shares, and also focus on their dividend, but also focus on buying back shares and focus on paying off their debt. So we'll see if that actually happens. We'll see what their corporate governance provides. But yeah, let me know what you think of this video about NAT's prospects going forward. Let me know if you own any oil tankers or if you sold already and how much you're down. We got to support, create a community. And if you're also interested, check out the Discord. Check out if you want to get in my private group where I have buys and sells. It's about $5 a month. Or if you want to support me at all, join the channel. All the links are down below. So yeah, take care. I love you all, and I'll see you in the next one. Peace.